Hey, traders, welcome to Charts and Coffee. Happy Tuesday, everybody. Hope everyone is doing great. Hope everyone's doing well. All right. We're starting off a week where it does look like the volatility obviously is still at extremes. And we've been talking about this for since the 4th. And one of the things I wanted to share with you all is people ask me, Rog, how do you look at volatility? How is this something you measure? And more so, when does it go back to normal? Now, I'll show you two ways. One way everyone can do, and the other way, which I frankly think is a better way, but it's something that I do. So let's take a look at both, because this is going to be important. When is it safe to go back in the water, right? So this is definitely like an episode of Jaws. And every morning I head over to the office here and I think, oh my gosh, I can hear the music. Dum, 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 dum. But not everything is in the land of Jaws. We'll talk about that too. All right, so let's get to it. And if you have any questions, as always, phone lines are open for your requests. Feel free to type them on in and we'll go from here. So first of all, what is happening on the S&P? Now, I'll just look at the S&P as the market because it's the best sort of combination of things that are going on in the NASDAQ and things that are going on in the Dow, right? S&P is weighted with tech. It's also weighted with financials. It's also weighted with healthcare and energy. So you've got sort of the big, heavy hitting sectors all combined here. All right. So first of all, you will see that even starting off the day, we're right back to a high volatility, so high that the daily price movement ranges here are telling us not only is it high, but these are inverted. The gold should be on top of the gray, right? In a normal environment, normal meaning 68% of the time, what is the price movement range for whatever symbol I'm looking at? This is custom to each symbol. This is not based on a certain number of periods. This is based on basically 6 months of calendar action, but in this symbol. So ES is going to respond differently to certain things, to crude. Crude's going to respond differently than certain things to gold. And those are based on days, not a set number of periods per se, right? So we have another crazy session happening already, and the bell hasn't even rung. Now, remember, the futures contracts are a great way to get a jump start on your morning, which is exactly what we're doing in charts and big mugs of coffee. So what do I do with this? Well, there's two things I can do. I can shorten the time frame, and I can look for short-term swings, which is some of what we have going on right now. Are we trading in this environment? Absolutely. Just not necessarily always going to be the indices. Now, we know that this is high volatility. We know it's been high volatility since the 4th. That candle right here, that's when all of this started. And for multiple reasons. This isn't just geopolitics. This isn't just the FOMC. This is not just earnings season. It's all of it. I'm feeling like Marky Mark in the Perfect Storm movie. That's exactly what right now it kind of feels like, but not everywhere. So I've shown you how I've used historical volatility. By the way, who else uses historical volatility? Institutions, right? They're not just looking at price. They're looking at they're actually seeing some of the volatility they're creating. Now, the more common way is by looking at something like the VIX futures. All right, so VIX futures are best understood by looking at it. I call it pole position, right? So what is the high and low gear? So here you can see this is our high. This is all drawn by the Darvis, by the way. These are all the Darvis 2.0. It's not traditional Darvis, but it's definitely an homage. I'm a big fan of Nicholas Darvis's work, and this is definitely an homage in many ways to what he does. All right. So I see high and low gear, which is where we've been working from until, all right, who's going to be surprised when I tell you that's the 4th? Now, it's fine to know we're exceeding high gear, but I need to know the price. That's what VIX won't give me, right? That's what I can't glean from the VIX. So while it's neat to know it's confirming what I'm already seeing on the daily price movement range, this is another way you can visualize it. And yes, we are well above high gear. And as long as that's the case, we're going to continue to see a lot of unusual price action. And even the VIX itself, I've got the daily price movement range on, so I can see what is normal action as opposed to in terms of day to day to day to day, right? Which is far more valuable than just knowing we're at the high or at the low. So In combination, they're a neat thing, but everything's going to be taken care of by looking at that daily price movement range. Let's jump on back over there. So once again, here we are motoring into this environment. Now, I've mentioned there are some good things happening. There are some really good clarity things happening. So let's jump on over then to where we would measure that. All right. So I'm looking at the sectors, not just what's going on in the S&P or the NASDAQ or the Dow, but if I lift the hood on those indices, what am I going to see? I'm going to see groups of sectors, and in those sectors, there will be stocks. And when I take a look at what's happening, this is what's so important, to be able to reassess every day. I'm asking myself, where is that performance, right? Where is that performance? And if we think about what was happening in Q1, semiconductors and communications were leading the charge in Q1. Therefore, the things that we were trading in Q1 were distinctly different. Part of what we do every single morning in the mastery is we look at this every day, whether that be intraday, whether that be for short-term swings, whether that be for longer-term swings. And if I know that what was working in Q1 is no longer working in Q2, well, it's a really easy question to ask. Now I ask myself, all right, where is the money flowing? Because the money's got to go somewhere, right? There aren't under the mattress futures, right? There isn't hiding under the covers futures. What we need to do is ask ourselves, where is the flow now? And you can see it's dominated by miners, metals, and energy. That's fine. That's our now semiconductor and communications. But what happens to a lot of traders is they stick with what was working, not what is working, right? We trade the markets we have, not the markets we want. So persisting in a heavy emphasis on semis, persisting on a heavy emphasis on communications, and expecting the all-time highs to come at the pace that they did in Q1 is going to lead us to a lot of frustration, right? Who here is saying, yeah, Rag, I'm pretty frustrated. What worked isn't working now. It's not necessarily, now let me add this, if your Q1 was in a quarter of growth, in fact, let's go back even to Q4, which was a very good quarter of account growth, because that's all we're really talking about here. Everything should distill down to, how do I grow an account and use tools consistently? Consistency, account, right? So now I ask myself, well, if it wasn't working now, what is working now? And then I focus on those. And that's a big part of what we do every morning in the mastery, because we focus on this normalized performance. Now you can too. It's very doable, right? I want to share with you these processes when I'm with you in Charts and Coffee. And you know then why, when I go to let me move this clock over. Actually, let's move this over. All right. So now you know when I go to the S&P, I'm not all that interested. But take a look at this. So volatility, yes, but not quite as nuts, frankly, as what's going on in, and by the way, it's retaining the trend. So we have volatility, yes, but not the persistence of 5 and 6 high volatility sessions strung together. Is that normal? It's not normal. 1, maybe 2 sporadically throughout the span of months is what's normal. All in a row, bunched up together, that's extremely abnormal. So XLE, XME, these are the things that we want to focus on. GDX, these are the things that we want to focus on, at least for trend following. And why am I focusing on where the trends are? Because that's why Q1 was so good. Now, if you recall, throughout the last 5 months here in Charts and Coffee, we've been talking about the season of account growth, and it was a good 5-6 month season. And now this is where things take a break. Everything takes a break, right? If you're at the gym, you do a heavy set. What do? You sit and catch your breath. That's all that's happening right now in most of these sectors that I'm showing you. But it's not necessarily what's happening at in the broader averages, because those are dealing with other bits of volatility that are something that's far greater than, is gold strong and therefore GDX is strong? Is crude oil strong, therefore oil services, energy, oil and gas explorers are strong? So you see the connective thread? We got to think about it in a top-down way. If you focus on it in a top-down way, and then you focus on relative outperformers, which is the heart of what we do in the mastery, the sector secret not so secret, is how do we focus on where the follow through is going to be best? Do I have downtrends in the NASDAQ? I actually do not. The NAS is actually chopping violently, like a choppy bullish environment. It's chopping like it would like to eventually go up again, but it just can't yet find a floor. If we're going to stand up, we need a floor, right? We need something solid to stand on. What is a floor? A floor is support. A floor is buyers, right? A floor is, what do buyers bring? So buyers show up at a floor, they create support, and that buying support is what? It's demand. That's just not what we're seeing steadily in the indices. So use whatever verbiage you'd like: ceiling, floor, support, resistance, buying, selling, supply, demand. It's all the same thing. So as long as we know how to identify it and hopefully steer clear or adapt accordingly to what we continue to see. So we've shown how to manage, or at least understand and measure. Forget manage. Let's start with measuring what's happening from a volatility perspective. And then we want to make sure we're focusing on where the volatility is not as troublesome and where we can focus on opportunity. And a lot of that's going to continue to be energy and connected to crude. A lot of that's going to be metals and mining connected to copper, gold, silver, etc. Right? So focus on that. Don't focus on what was. That's Q1. Q1's days of tech and semis, NVIDIA leading the charge are long, long, long gone. At least for now. Doesn't mean they may not come back, but adapt. Adapt is at the most effective level. Adapt is going to be trading the ultimately checking the relative performance, checking the trends, and making sure I'm sticking with those. All right, so let's grab a couple symbols that are coming up here. And Sharik says, I'm new. How can I make trading setup so I will be able to follow you in futures? Sharik, I do not recommend, if you're new, starting with futures. That's an easy way to blow up your account. I've seen it many times. A lot of people go into futures trading with big stars in their eyes, and because of the leverage and speed, it ends very badly. So the first thing to do is start with something that's going to move in a way that we can manage the leverage and risk. Sure, micros are fine. They tend to, you want to follow me in the future? Oh, eventually. All right, I got you. Bots telling me, you didn't read that right. Okay. So eventually, how do you join me live? Yeah, head on over to the Sector Secrets Mastery, or join me in the Top Tier Pro class, because you get time in the mastery. You get my full set, my full complement of the Top Tier Pro system, including daily price movement ranges, depending on where you want to sign up. But the best place to join me is over in the Sector Secrets Mastery. Absolutely. But let me just kind of finish the thought on futures, because a lot of folks might say, Rag, does that mean you're trading gold futures? Does that mean you're trading gold micro or so forth? No, we're going to focus on ETFs because the leverage is a little bit less there. All right. So if you want to follow in the future, when you're ready, I will tell you this. Everybody, I'm going to tell you something that most folks don't want to say. And as much as I'd love you in the room right now, Sharik, this is what I'll say, because I don't know everyone's situation. So this is just sort of a catch-all. Do not start in this environment underfunded. Do start studying this environment, right? Do not come into this market as if we're dealing with Q1 action. That's a lot easier an environment to trade than right now. Do start studying. That's where the class is going to be so effective. That's where getting familiar with certain tools is going to be effective. So I will say, definitely come join in the Sector Secrets Mastery, but make sure in this environment you are properly funded, right? Meaning you're not starting on a shoestring account. In fact, I don't recommend that. When people say, how do I grow a small account? I usually say, study, invest in yourself, but grow the account until you can come in, like with any business, properly capitalized so you can handle all the ebbs and flows. All right. So thank you for the question, Sharik. I appreciate it. All right. Next up is Visa. Let's see. Well, no, I'm sorry. Tesla. All right. Tesla. All right. So Tesla is one of those stocks that the Top Tier Pro system has been saying, if you're going to do anything, short. If you're looking for a long, stay away. How long? Okay, Rob, how long has the system been saying things are bearish? Since the first of the year, since the beginning of the year. When did things decidedly get bearish? And I'll give you the specific dates, right? This is how specific the top tier is. So red candles on the 3rd, and then bearish environment on the 11th. By the 11th, this became focus on the short side, and it's still working. It's still working. Focus on the short side. Tesla is not a name to go bottom picking. Tesla is not a name to buy. It's the lower probability side of where this sits on the chart. So Tesla is definitely something to focus on, what we call when the red meets the gold. That's a short setup. That's long puts or short shares. If you're collecting premium, let's say you're saying, Rog, I'm a little bit more of someone who likes to write premium. Great. Write calls on up days into the gold, right? If you want to. I don't like to do that. I'd rather just be directional. That's just my preference. But yes, the direction is still down, and nothing's changing with that. I know a lot of the news right now, I guess the layoffs, but the layoffs are not, the layoffs are now. This has been bearish, as you can see, for the entire year. Another stock that looks very bearish and has for a quite long time is Apple. Not clearly as bearish as Tesla. So things got very bearish at the beginning of the year, and actually just before the beginning of the year. And then decidedly more bearish mid-February, and really hasn't come back up since. So come mid-February, the overall direction expectation for Apple has been down, absolutely down. So that's another one that looks like Tesla, the same process, the same tools. And now we're able to say, all right, is Apple something I would look for buys in? No. And even though a candle like this might look interesting, it's still in what I would consider the bearish hemisphere. What else looks bearish? Boeing. Nothing about Boeing suggests we should be looking at buys. Once again, look at where the candles start telling us things are bearish, and buy. Let's see, specifically the 16th of January, this became a short-only environment. And one of the things that we want to think about is whenever we look at a symbol, that time frame, but whenever we look at a symbol and a setup, we should be so clear on direction first. This shouldn't be, well, I could buy here or sell here, or I could be a bull here and I could be a bear there. You should be able to look at a symbol, and that's what the top tier is designed to do, and just say, look, this is a bearish symbol. And until certain criteria are met, that's all I'm going to be looking for. The short side, the weak side, the bearish setups. And Boeing's another great example of that. Now, we talked about where the relative performance is bullish. Look, you can have relative performance that's bearish too. So if you're saying, Rob, it doesn't seem like you're shorting much. I don't like to generally short. I like to be long. It's a far more predictable type of pattern. It's a more predictable type of behavior. And that's where I do like the movement. As far as Tesla at 100, I don't know. Right? Right now, the support is sitting at about $1.60. Would we get a shot at 100? Right? I don't know. Where is it this morning? I haven't really looked. Yeah. So that seems to be where it's sitting. No? Where is it this morning? I don't trade Tesla all that much, to be quite frank, for all the reasons that I mentioned. But yeah, Tesla's sitting at about $1.60, $1.57. Yeah, maybe 150 could be interesting. I would say if anyone's looking at Tesla longer term, look at it longer term. And that means open it up to a weekly time frame. And that would be mapping to setups that would last months, if not potentially years. But I would be very cautious, right? This is not an environment that I'm even allowed to buy, not even allowed. Could there be support there? Yes. And then could we see something like this? If we're looking for more downside, it depends on the structure. So I won't buy any name. I won't buy calls in any name. I won't buy any name unless it's at least neutral. At least neutral. So Tesla's had a rough go. It's not firmly neutral. It's kind of wavering between neutral to bearish, but yeah, we'll see what happens. Could we get down to that level, that 150? Yeah, it's not out of the question. It's not out of the question. All right. Let's see. Why do the grab lines only print at, the top tier wave? Okay, great question. Pete asks, why do these lines, and this is the top tier wave, why does it stop? Why does it only print at certain places? Good reason for that. So the wave is really the tool that I use for mean reversion. And mean reversions are not always applicable. I'm not always looking for a mean reversion. As far as a setup goes, right? Mean reversion is just math. So take the math out of it and talk about mean reversion as a setup. Mean reversion setups have a higher probability in a trend. So if I can gauge the trend, then it's pretty easy to tell the mean reversion tool to stop. Stop giving me your input. A lot of times we have things running on our charts that don't need to be there. A lot of times we hang on to things, asking it questions, when in reality, it doesn't necessarily know the answer. And that's why those stop and start. That's why those stop and start. And gosh, is 20 minutes already go by? Holy cow. All right, gang. So that's a wrap. Thanks as always for being here for Charts and Coffee. We'll be back tomorrow, same time, same stations. My Simpler Trading Essentials folks, great to see you. I'll see you again on Thursday. Everyone else will be right back on my Twitter feed, X, whatever that's called now. I have to get used to calling it X. My YouTube, and also Simpler Trading's YouTube. Be good to each other, gang. I'll talk with you soon.